Please subscribe for more videos. Click the bell icon for updates.
What is activity-based management? Activity-based management is a system in which the company analyzes and evaluates the business activities based on the costs incurred and the value added by the activities. It identifies the strengths and weaknesses so that it can enhance the strengths and can work on improving or eliminating the weaknesses. It helps in identifying the problem areas so that the company can focus on them. By this, we can not only improve the profitability and financial strength of the company, the results can also help in preparing accurate budgets and long-term financial forecasts. The main objective of the activity-based management system are: Number 1. Identify and increase the value-added activities. Number 2. Identify non-value-added activities and work on either improving or eliminating the activity. Number 3. Finally, it needed redesign the procedures in order to increase the efficiency and profitability. What is an acquisition cost? Acquisition cost is the cost of an acquisition of either an asset, a company, or a new customer. The acquisition cost for fixed assets in the amount paid for the assets such as plant or machinery before sales taxes applied. Any cost incurred to get such asset into a working state are considered as a part of the asset's acquisition cost. The acquisition cost for a company is the expense incurred in purchasing a business unit from a company or taking over a company. The acquisition cost of a new customer is a cost involved in getting a new customer. This cost helps to compare the revenue the new customer brings to the company. What is amortization? Amortization is a process of writing off or reducing the value of either a loan or an intangible asset. Amortization can be used in two situations. 1. When it is used in process of reducing or paying off the debt through regular installments, which includes principal and interest payments over time. It is used to reduce the current balance in a loan. The second situation is when it is referred to the spreading out of capital expenses related to intangible assets over a specific duration, which is the projected life of the asset. It measures the consumption of the value of an intangible asset such as goodwill, patent, copyright, etc. Who is an agent? An agent is a person or a party or a firm who acts on behalf of the client or an entity. The agent will be legally empowered to act on behalf of another person or the entity. The person represented by the agent is called the principal. In finance, the relationship is known as fiduciary relationship, in which an agent is authorized to perform transactions on behalf of the clients. There are three types of agents. 1. Universal agent. Often these agents will be given the power of attorney for a client, an authority to represent the client and to make financial transactions on their behalf. Number 2. General agent. They represent their client in specific type of transactions or proceedings over a set period of time. For example, a talent agent for an actor. Number 3. Special agent. They are authorized to make a single or a series of transactions within a limited period. For example, security agent, real estate agent, travel agent, etc.